Okay, good afternoon, everybody. This is Dennis Wilborn. I want to welcome you to the How to Make Money Trading Stocks and Options, plus a trading tips live stream that we try to do most Fridays at a couple hours before the market closes. I am the active trend trader. I want to welcome Dr. Steve Ferrara, who's with us also. He's got a good stock. He has an old standby stock to share with us today. Good morning, Steve.
Good morning.
And I can say good morning to Steve. Hey, what are you doing to stay warm, man? I tell you,
I think we have many sympathizers on the mainland.
Yeah, no, there's no sympathizers on the mainland when it's cold in Hawaii. They kind of go, sorry, it doesn't count. But yeah, I'm sitting there. As you can see, I've got a hoodie on,
right?
A sweatshirt, a long sleeve shirt. I've got long pants on.
Absolutely.
Socks and my wool in my.
It's cold.
It is. Yeah, Jeff, it's about 70. No, no. Last night it actually got down in the 50s, and so as I said, we have no heaters here unless you have your own little space heater, and we don't have any of those. And so it's with the wind chill, it was probably at least down to 55, Steve, last night.
Yeah.
So anyway,
I can believe it.
And so, hey, let's get going. Hey, we want to basically provide these sessions. We want to do it in about 15 minutes, we cover basically a couple of different things. One, the active trend trading system is a clear and simple system designed to maximize profits, minimize losses for all calibers of traders. We want to do a real quick market index review. The market continues to march, just blasting higher. At some point, the lack of momentum will take effect, but we just don't know when. I've got a really good master trading tip for you today, and then Steve's got a really great pick of the week for a stock that may be almost ready to be, you could almost buy this stock, I think, today.
Yes, today. Today is a good entry.
Today is a good entry. Yeah, I looked at it and I said, man, this is pretty good. And so, yeah, Jeff, the way Jeff says, come on, man, 70 degrees. But it's really funny. You can tell the people who live here in Hawaii, because when it drops to below 75, they start getting their sweaters out and their long shirts and all that kind of stuff. But they still rock around in their shorts and their slippers. Steve knows what I'm talking about.
Yep.
And so, you get acclimated to weather here. And Mark Longenberg, we got several people here from Hawaii. Mark said, I froze last night. I did too. My wife had to bring out the extra quilts for the blanket. And so I know we're you guys are playing my violin for it. Thanks, Eric. So let's go ahead and just remember what we do is for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Tip for today. Basically, whatever trading system or platform you're using, learn how to do conditional orders. Why? You want to learn how to do conditional orders because, one, conditional orders hide your prices, the price specifics from the market makers. Now, a lot of the brokerage houses come out there and say that they keep their orders out of the market until it actually hits, and then they put it in, all that kind of stuff. I prefer the old-fashioned way, and I try to hide and part of the way I do that is I basically have my Thinkorswim platform trigger my orders only once it internally hits a certain price level, and that way the market maker doesn't know what I have planned. And then number two, conditional orders means the trader has done their homework and has identified the action value zone where they can buy at wholesale and then hopefully turn around and sell at retail, and or at least have a really close, tight stop loss. And then conditional orders also help to avoid trading surprises. I use my condition orders more or less to put my trades on autopilot, so that they can go ahead and kick off on their own. It gives me a sense of I won't say comfort, but a sense of peace in a way that the price, that my trade will be protected to the downside, or from falling away from me. Now, if something catastrophic happens, yeah, that is always the case, but that doesn't happen very often. So anyway, hey, if you could let me know how many stocks or ETFs are on your watch list. How many stocks are you actually watching? If you just leave a little note there in the chat box, and if you're watching on YouTube, just drop a number in there. How many, so, because sometimes if you're watching too many, you can freeze up and become like a deer in the headlights. And so how many stocks or ETFs are you watching? So let's see how things are looking. Okay, as of about 9 o'clock this morning, that's Pacific time, I took a snapshot. The markets are all up. The Russell is just running away with the show. I mean, it's really doing an awesome job. The active trend trade, slow and steady. We want to be consistent. We want to basically provide a consistent, systematic routine, and we follow it. Last year, we followed that routine, provided us, excellent returns of about 70% last year, and has done so really, has given us really great returns that beat the market every year, so going back to 2012. So I'm pleased with that. But with that said, let's take a look at what is in store with the indexes. And I want to start here with the S&P. Anyway, I was doing a little bit of figuring, if you will, and there's a couple of different areas we can take a measure on. I measured this, last major drawdown, which was over in October, pull back down here, and as you can see, price action got all the way up to a full 100% of the extension from the breakout up to this level here at the 385 level. It's actually stuck its head above that line. So we have a new breakout to what they call blue sky territory, where there's no defined levels of resistance above that area. So it can continue to climb. And again, I use my Fibonacci's to identify, well, where might it go from here? And as you can see, I've got a number up here at the 2618 extension, which is at 404. Let's do a real quick comparison real quick. Let me get rid of that drawing. Let me go ahead and throw in another fib. And if you don't know how to use fibs, I have put a really good training session on Fibonacci's, both doing price action and time Fibonacci's, and it's on the YouTube channel, our YouTube channel, Market Tech Talk. If you remember, we had that price action right there at about 404, which was the extension. Well, as you can see, the 403 level right there, 403.42. So it was within 50 cents of that other Fibonacci level. That looks like that may be an area of potential technical resistance where price action could, in fact, turn around there. But price action could also turn around at the 1272, which is up here at the 390, and also the 1618. Those are naturals where price actions seem to be attracted to that. A lot of traders, a lot of institutions who use Fibonacci watch those levels. And so that's why oftentimes as you're utilizing your Fibonacci's, you'll see them repeat around those particular zones, repeat their action. In other words, to get up to that zone, they slow down, they stop. Sometimes they reverse and fall back down to another zone. But they're a lot of fun to use. So the spiders, what are we looking at? If prices stay the way they are, if prices stay the way they are, we're looking at kind of a hanging man kind of candlestick today. we do have the opportunity for it to go on up and shoot up towards the upper side of the channel, which would also put it outside the into the middle of the Keltner channels, where we can expect some kind of a pullback into the moving average. Right now, I don't have a trade to the upside. I don't have a trade to the downside. I'll be looking to trade spiders to the upside if it continue, as long as the momentum continues to move higher. I'll talk about the momentum on the Russell, because as you see, Russell's looking a little bit more shaky. And why do I say that? One, spinning top doji at a high, after breaking out to a new high. So yes, we have a new high. However, look what has happened over here. Let me get over my drawings. Okay, what's going on here is we have negative divergence here, negative divergence here, as price action are moving on higher. Weekly chart, yes, we are in a nice uptrend. Again, I'm not going to short this at this particular time because basically we're making a new higher high, but we're getting signals saying that negative divergence on a weekly chart can oftentimes lead to a more significant pullback. This was a pretty nice pull. And the other thing that I'm looking at is this pullback here has been the most largest pullback of any of the ones we've had going back to October of last year. These all were shorter-lived pullbacks. So oftentimes when price action gets into a topping mode, what you'll find is that the basically the pullbacks get a little bit more severe, a little bit more deeper, and it results in a jackhammer effect on the moving averages to beat them over, and they finally roll over to the downside. At this particular time, though, everything is stacked in the bullish mode, and so I'm going to keep trading the pullbacks until they stop working. That's what's going on with the Qs. Next. Come on. Over to take a look at the Russell. As we saw, Russell was just on a move. As you can see, Russell is approaching the 1272. See how close it came. It came to a high of 221.47. And look at that. That level one on the 1272 is what at 121.46 and a half. Pretty amazing that they work out to be that close, but they do. So we have another breakout. I'll look for, we can utilize the breakout level at 217.84 or 218 as a potential move to jump into a new trade on this, or it may, in fact, pull all the way back down to the 8 or the 20. And right now, price action, stronger bounces are coming off of in between the 20 and the 34. But that would be a much deeper pullback. So we'll keep our eye on that, IWM. And, Steve, other than for the active trend traders in the autopilot leverage ETFs, which got us into TQQ a couple of weeks ago, about a week ago. And that trade is on the second half of the trade is up about 13%. So we're really pleased with how that one's doing. So that's what I've got for the indexes, Steve. I'm bullish. Good.
I am bullish. I am bullish. Particularly so because remember last Friday was ugly as sin.
What's that?
We turned last week Friday. It was ugly. It was very ugly.
Yeah.
Looked like the market was going to really roll over and get down a lot more. We turned on a dime on Monday, and for me, most of my setups triggered Monday, Tuesday, Wednesday.
Yeah.
So really, I don't have very many good ideas right now, but I think Apple is a good one to consider.
Well, and that's why when I look at this, I said, this is a darn good idea, and this is something that somebody could look at, today. Tell us about it.
Okay, do you have Apple? Is that a daily chart? Yeah, you do.
Daily charts on the right.
Yeah.
Weekly chart.
We had the pullback that ended basically last Friday.
Right.
And we've gone sideways. And yesterday, to me, was the trigger. The buying action was a trigger. And I should have got in yesterday, but I did not. But I think today is a wonderful buying opportunity right now.
Okay.
into the close.
Now,
There's momentum that's starting to come back into this stock. The MACD indicator is starting to trend up. TSI is starting to trend up. I like the price after a nice pullback. If you like Apple, I think today is a good day to enter. With a tight stop, under the low 3 days ago would be my tight stop.
okay. So that basically you would put a stop below this low right here.
That's correct.
Okay,
Right
yeah,
below.
that works for me.
Yeah.
Yeah, that's and when you put your stops, how much below that level are you putting your actual
5 to 10 cents.
5 to 10 cents. And so, and I know Steve's performance has been really, really great. And so I want to let you know that, it's okay to use those 5 to 10 cent stops occasionally, because in reality, we want to be out of a trade as fast as we can be if the position stops working for us.
Correct.
And so if this little uptrend that's going on right here, if that is to continue, what should happen? Well, price action should not take out that low. And
Correct.
So, and that is a really great technical approach to basically how to keep tight stops. And, because we want to save our capital to be able to trade another day. I like to trade. One of the things I'll throw out there from a perspective of an option, if we anticipate prices moving in this direction, I'll just throw this out as a thought. And I can basically let me grab this real quick. And I'm just going to take a couple of, I could go back all the way to here, grab that. Yeah, that's working out pretty good.
Yeah.
And I'm going to extend that to the right. And I'm going to go out here a couple of weeks. I'm going to go out here to 218, which I think 218. Yeah, we have options. The monthly options expire on 2/19, I think.
Right.
And so again, at 218 here. So if I could go in a second and say, hey, the 135, I could basically go in and sell the 135 puts that were out there in, expire on February 19th. And I could either do it as a sell the puts there, and that particular, what is it? 130. What did I say? 135s. 135s. Yeah. You get about $2 for that, but I could roll that in with a $2.10 and a $5 wide spread, and pick up the 130 by 210. So I could pick up about a credit of about $1.50 to $2 with the anticipation, as long as this trend line remains intact, prices should start working their way up. If I wanted to hedge it and go a little bit steeper, I could actually sell something like the 137.50s. Anyway, just a thought I wanted to throw out there to you. What do you think about that one, Steve?
I like it. It's a great way to stay bullish. It's all about remaining bullish, but doing it in different ways and different risk profiles.
Exactly.
Yeah.
Exactly. So, anyway,
just an aside, I got into this trade today, about a half hour ago.
I like it. Yeah. So okay, let's go ahead and just finish things up. Hey, we've got something going on tomorrow. And also, Active Trend Trading is launching a new service. It's called Autopilot Trading. We will basically we have been doing the top 5 for the last 2 years. We are now adding to that the leveraged ETFs. If you're a premium member of Active Trend Trading, you already get these. But I'm going to be doing a special webinar tomorrow. And I'm going to actually be talking about how to leverage non-monetary assets to build wealth quickly, even if you're too busy to watch the market all the time. Because, the way I designed the active trend trading system was when I was working 10 to 12 hours a day, 6 to 7 days a week when I was doing my engineering work, I didn't have time to watch the market. So it was very tiring. So I designed the system so for people who are busy, and both of these services can be implemented in an hour a week. And so anyway, the Zoom call will be tomorrow at 12:30 Pacific time. Registration link will be provided in the YouTube comments, and it'll also go out with the email for the video. So that's all we've got. So learn how to switch to autopilot. I think you'll really appreciate that. And I know the comments that come in from the folks who have been utilizing the autopilot system for the top 5 growth stocks. I think that they have been very pleased with the service. Some of you guys are on that. You've been doing all right with that service, right? That's a dangerous question to ask, right? No, I think because we get you the information by Saturday, and that way you have all Sunday to be able to put the trades on, and then you just put them on conditional orders, and you're fire and forget. So, okay, that does it for today. Steve, I want to thank you for joining us. We got it. We kept it under 20 minutes, and so
it's a pleasure.
And so 2021, I still think it's a year of reset and of wealth building. For premium members, we'll be back with you at the top of the hour for the final hour. I've got a couple of trades we're going to get set up and jump on. And then finally, from our home to yours. And this is, yeah. And don't let the white sands fool you. It is cold here today. That is actually like snow. Anyway, aloha. Trade well and prosper. Keep sharpening the saw, everybody. And if you're joining us on YouTube, please subscribe to the channel, hit the bell, and you'll be notified when we, do provide updates. I am also posting all my on the radar updates that I do on Tuesday, Wednesday, and Thursday at 1 o'clock Pacific time when we go live on Instagram. So until then, aloha. God bless everybody. Thanks, Steve.
You're welcome. Take care.